with fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a second of your time. Let's go into the charts. Bada bing, bada boom, and we go. And 12 hours candles later, we are back down in the below the 0.5 of the upper pitch fan region of this mean reversion path to the upside, which means we are at a discount if we are going to continue higher at this level. Do we see the consolidation range? Are we going to break and make this lower 41-day area liquidity pool of these 41 days of longs? Let's go into the heat map of high block to figure that out. What is high block? Well, this is where people leave their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss. And we get to see who got crispy and burnt to a crisp today. So let's start by going into the 1 minute time frame. As we saw, they came back into these 50x long characters, and below even went into this region and took out some of the 25x down here on this 1 minute time frame. And immediately thereafter, there were some bubbles to the upside that were opened up in a thick manner, particularly the 100x characters at 161 million at 26.9, which they quickly V-shaped recovery to take back and said, "No way, Jose,"
And fatality.
as they liquidated the 100x as they like to do. And here we are back at 26.9 region, contemplating where we go as it looks from the noodles on the right hand side. Why do I like to use this reference of noodles? Well, if you look here on the right hand side, you will see that these strings, if you will, these volume nodes of all these bubbles represented to the left here are located as in terms of hundreds of millions up here, and you see how they stack up. And currently the stacked region is at 27,757 with all these bubbles located above, with very few located below. I like to use the ramen noodle reference because the broth is thicker right now down on this downside path. Now you do have some thick regions over here at 26.19, which we could come back to on the external liquidity range, but just speaking strictly internally, we should see a bounce up to the 27.71 region and all the other bubbles that were lost to time up here. So if we see this bounce to slurp the noodles on the right hand side here, coming up to this 27,757 seems to be the stacked region in question here, with some 100x pool up here at 27.3. So at the bare minimum, wait, let's go see how much this actually is. We can zoom in here. Oh, that guy was actually reclaimed, never mind. So this 100x pool was quickly reclaimed, as they like to do. So the 100x stand out to me more than others, because if they leave those in the charts, they come back to them, generally speaking. So you got less below than you do above, getting equal interest as of this moment in time. So they could come down to this 100x or this 100x above. It's not really clear which side is being favored at the moment in this immediate time, but the imbalance on this 1 minute time frame is to this region up at 27.71. Now let's expand our vision using the heat map to go to the higher time frames. By higher time frames, I mean 7 day, 1 month and above. So let's start with the 7 day. How's everyone doing out there? Good morning, Low Mips. How's it going? Thank you for stopping on in. Yo, Prehab, what's going on? All right, so the 7 day time frame does have this imbalance to the upside up here at 27.8. We've been going over this region for some time. We have not yet broken that range, but it's getting ultra thick on this 7 day time frame. However, if you start to shift to the higher time frames and expand your vision there, you still see that on the 1 month time frame we do have an imbalance of here, particularly 40 billion plus in double digits past the 30k region. If we do start to see that retrace up into that region, we do have an imbalance now to the upside on the monthly and 7 day time frame. Here's where it starts to get interesting, because as you expand your vision to the 3 month time frame, you notice this 150 billion down below at 25.6, 25.4 and 25.2. You got 56, 60 and 51 billion dollars down there just waiting to be liquidity grabbed up, and you're getting this thick region down below at 22.4 and 22.6 as well. So this entire imbalance to the downside on the external range is why we've had this region highlighted for quite some time. We previously had it highlighted up to here a few weeks back, and now we've seen that reclaimed all the way down to here, with this little bit of happiness left in the charts of that $150 billion of 41 days of consolidated longs just waiting for upside and not paying themselves. So are they going to come back into this? The idea of doing that extended W could see this likely to occur, and you bounce off of that 0.382 diagonal fib level and find that divergence possibility. Anything's possible though. This could be the double bottom that you send to the upside as of this very minute. You have to keep a plan and an if-then statement for every possibility available to you within the up-down 50-50 path it could take. All right, so as you go to the 6 month time frame, you do also see this imbalance to the downside, which we would like to see reclaimed if you were going to see a true divergence long play. So if we do go up at this time, it would be most likely to clear a divergence and clear some imbalance to the upside in shorts, and then continue possibly lower down into these regions, because you have hundreds of billions of dollars down on the path to 25.2 with 22.5 with 103 billion down here. So this entire path is caked up with double digits of 50 plus billion each step of the way, and you do have that narrative structure being formed to the upside, so you let's not forget that as it starts to form an upside path as well. So we've seen that occur where they leave the short liquidity to come to retrace into the longs, only to come back into the shorts in a short manner after. So we could see this retrace down into the 25.2, 24.8 region, get that 200 billion off the table, and then spawn some divergence to come up to these hundreds of billions that rest above. So the narrative structure above does have 82 billion at 34.8, 34 even, 78 billion at 33.6, 104 billion at 33.2, 102 billion at 32.8, 126 billion at 32.4. So this path to the upside starts to become a little bit more possible as you expand your vision to the yearly time frame, and this is where things get interesting, because it's not as clear as it was on the 3 and 6 month to see that 150 billion be grabbed down here. Now we are a hop, skip, and a jump from the price action down to that region, so it seems like the more likely option at this time, but anything is possible. You do have 38 billion up at 28 even. So if we just look at the current place we are at, nothing else, and look at what's nearest by from our current price and time, you have 30 billion down at 26, and you have 40 billion at 28. So do you come back to this 40 billion first before coming down into that 150? Sometimes I've seen myself do this and then found they went in the direction there was most at that time. So we could be going to 28k to get some of that liquidity above. If we decide to retrace lower, 28k and fatigue points above might be a way to look for a short. So let's go into the charts, shall we, and see where those points of fatigue may lie. So we put this path a few weeks back. How long ago was that actually? So from our current point in time, that was about, we did it from literally when it happened. So that was about 23 days ago when we started to put this out, when we were making a lower high here. We even had it when it was here, when it was making a lower high, and we did a path as it was starting to form into these regions, and when it cleared those paths, then we started to see it retrace, and we did that as well. So how do you get these bearish trend-based fib levels? Like, how do you draw them for the first time if it's your first time ever? Well, you first get your trend-based fib extension level here on your fib retracement tools. You favorite it, trend-based fib extension is right there, and you do 3 clicks. One is the impulse, which in this case was to the downside, and then the second click is to the upside for the retrace. So in this case here, you have a wick down to here. This impulse to the downside created this math, and then you retrace to the upside, which in this case was to this wick here. That was the highest point, and then what that does is that starts to put a level for which you start to come back into, and we were talking about breaking below the 236, and that's where you would find your entry. And sure enough, we went down into these regions with a passion, and so now we wicked off of the 25.8 region. Sorry, this actually should be from where it started to drop, pardon me, should be from there to there. The impulse is the important part, so that's why we're seeing it start to come back into this 11382 region, and we started to see consolidation within these regions, and the 236 was here at a pivotal level. So this is how you would project out into the future of where levels could possibly come to fruition based off of impulse retrace. And the same thing occurs to the downside. So if you do this with a level idea for impulse retrace for longs, then you'd see that we, from this point here at the 236 level, we did come back into these 11382 similar fashion to here, started to fail at some of these levels and then come back down. So if we come back to the 236 at 25,382 and get bought up, you could see a bounce there. So there's paths on both sides that you could lay out the math to. So let's go into our Binance chart. We already did that for you. So we got everything laid out nicely. So we put out this, if we can hold the 236 at 27K, you could see some bounce up there. We did not hold that, so that is negated. So we can remove this as not being true. Okay, so we're going to go into our oscillators and then try to wrap it up with a nice bow tie for you. You got the liquidity on the table. We talked about some fair value gaps here, and the liquidity pools we lined out from back here, which we have yet to reclaim, that still are likely open, that are lost to father time. And yeah, so what are we looking for here? We got to turn on our oscillators. Oh, by the way, consider subscribing if you have not yet already, and hitting the like button, as it helps out the channel ever so slightly and shows us you care. Now let's turn on our heads up display and our oscillators, which are the Momentum Master. Link in the description for more, momentummaster.info, and that is something you can look into as we go over these components. If you have not yet seen it already, scroll down to features. You can toggle everything at your leisure. Whoa. At your leisure, you can see everything quick, layers itself quite nicely, and you can read about each component as well. All right, so we were looking for some sort of thinning of the cloud, which did not occur because we pierced right through it with the volume, shifting the cloud to a bearish idea. So this idea of kissing the cloud did not occur and did not thin, but we were looking at that on a 4-hour time frame. So let's see what the 4-hour cloud was looking like. Was it the 4-hour though? Hold on, it might have been the 6-hour. Yeah, it was the 6-hour cloud. So the 6-hour cloud is still curving in this manner, which is kind of interesting to note. So it's suggestive of a curvature which leans to making this move up. Now, if the curvature was heading in a downward manner like this, then it would suggest that we're still going down more, or the phase of coming up into this is null, would be negated immediately. So this type of curvature the opposite way suggests that you could have this kind of reclamation bounce out of here at some stage. Now, do you do that all the time? Well, here you had this curvature start to occur, and then we came up above it. While we did fail down, we did come up again as it was curving. So if you see this over here, so this curvature here, for example, so before this became curved in this manner, it was curving ever so slightly in this angle to suggest when this crossover event occurred that you could come up like that. So this is why the curvature of the cloud, which is a volume weighted formula, volume weighted cloud formula that factors the volume, is kind of an interesting thing to note here on the 6-hour time frame, this curvature. Now you're not seeing really a steady flow out here on that cloud, so that could be seeing more. You need to see this thin at some stage. We're talking about that thin and kiss. We are entering the weekend. It is Run for Profit Friday. We currently ran for profit to the downside. Are we going to make a run to the upside as well? We currently have the cross up event and the Fat Boy baseline still holding here on the 12-hour time frame. Let's start our descent through the time frames from the daily down below as we enter the weekend. Weekend becomes low liquidity trading, so it is not something to be taken lightly. So as we look before, 2 days ago, we had the daily cross up event confirmed. We are currently holding these thin and fat baselines. What do I mean by baselines? Well, you go to baselines here. These are your first sign of reversal. The baselines are one of the few leading moving average formulas you will find in the market. and they are not to be ignored. When they cross down, you see downside. When they cross up, you see upside. For the most part, nothing is a guarantee in life and nothing is a guarantee in trading, but these things do, if they hold those things, need to be monitored and noted, because they do tend to, this is not one of those places where I like to short currently unless you start to fail at them and close candles beneath them. Okay, so the daily time frame showing some signs of life here, getting the rising sun, but no bullish nature stepping up to the plate just yet. The angle at which this is open is flat, to say the least. You'd like to see something more like this, in this manner over here on the left, to see it be an actual rising sun event. However, the money flow is beneath the RSI here and getting into the oversold status. So the money flow is getting extremely oversold, and the RSI, and it's beneath the RSI, which it likes to come back to. Where are cases where it has done this before? Well, you can go back to here. The money flow was extremely beneath the RSI here, and boom, we came back with the fervor to the upside. So you're seeing this oversold status on the Williams as well on the daily time frame. In conjunction with this is something I do like to think about, and it looks quite nice here on the daily, ignoring all else about the liquidity and everything below. And if you go to the 22-hour, 22-hour did come down a lot here. You are getting the money flow above the RSI here, which suggests you could come down some more for a little bit of wickage action, liquidity grab hunting perhaps, but you are seeing the Williams still open up here ever so slight. This is giving back a little bit of stochastic love for a potential surge to the upside that could occur here. You are getting, let's look at the cloud here. We were noting this curvature as well on the 22-hour time frame. Okay, so this has slightly changed and gone down, pardon me. But you are starting to see this angle change. It's no longer curving down in this manner. It's starting to slightly curve a little bit in this way on the 22-hour as well. This is very thick though, so if you were to come up into these regions, this would have to thin, and this would be a dynamic point of resistance to watch out for. And if we make our descent down into the 12-hour, you also have the weighted adaptive moving average at the same level as the 12-hour here, the adaptive and the weighted at these liquidity pools and these fair value gaps, so those could be other points of resistance here. We are still seeing this baseline hold on the 12-hour, as we just previously said. You gave back some of the stochastic RSI here. We could see some, even though it looks like it's ambiguous and meandering, you could see a double top scenario ensue. The leading MACD formula is still holding to the upside, has not crossed down just yet. And if we go to the 6-hour, type of spew out to the downside events, as we did see up here on the 6-hour event that occurred here. We did have some cross downs that crossed up and then crossed down, so the 6-hour can juke you out sometimes. And here you had a cross down to a cross up to a cross down, so we've seen a cross down to a cross up. Sometimes they do juke out on certain time frames, so that's why you like to look at them in conjunction with one another. So like back here, for example, we had this 6-hour cross down event which did play out, and that was also confirmed on the 12-hour, the 22 and the 4-hour. So you had all of these higher time frames in alignment with that play to the downside, so you could get that leading moving average idea in advance with the others in your favor. So you're currently having the 12 and the 22 and the daily against this idea right now, so I'm not necessarily buying it. If you were a person to have shorted and taken this, hopefully you would have considered trimming and paying yourself at the bare minimum, because it could come back up into these regions and take out these fair value gaps. Okay, so 6-hour time frame is kind of holding the 50 region with the money flow and the RSI just chilling at 50, waiting for a move. Anything could happen in that 50 zone, just below 50 zone. It doesn't mean you need to come down or go up. You're in a holding pattern. You are getting bullish divergence here on the money flow and the RSI here from this wick, buyback wick here on the 4-hour time frame. This is a bullish note to be taken here on this buyback candle here on that wick. You held this one level at 26,651 here, so you're starting to see a potentiality of the reset of the 4-hour time frame and this curvature up here, and the bullish divergence on the 4-hour that is being printed. Okay, so the potential of a 4-hour play here. Hourly is overbought though, so how does that play out here with this cross down of the 4-hour and the 6-hour working against that long idea? So as of this moment, you're just doing a consolidation pattern here. You got a thick cloud on the hourly to contend with. That was a lot of dumpage that ensued last night. So this could be something to be a resistance point as you come up into here. Likely coming into some of these fair value gaps up to the upside could be something you stab up to and get rejected off of. But if you reclaim that 6-hour cloud here, and which is noted by this yellow line, if you start to come up here and hold the hourly and reset the hourly in a flag like manner, then you could see your path paved to the upside if you reclaim that cloud on the higher time frame and it starts to thin. So all of this if-then statements you need to see, and then that's where you'd want to see your entry and the reclamation of the cloud on the higher time frame and the resetting of certain probabilities like here on the hourly. You're starting to see this push up ensue. In about an hour you will see the handoff to London. We are seeing the cross up event on the hourly. How much more does it give you here on this double top scenario? You got this thick cloud, so that you got potential rejection here galore on all these time frames. So right now, just consolidation for basically a week now. We've been down in this region since last Friday, so we haven't really gone anywhere just yet. We're accumulating positions or distributing positions to go further down. The reclamation of the cloud here on the 15 is showing a potential kiss and continuation to the upside here, so you could see this continuation up to the regions we talked about, which would be like this wick up here to this region. With anything we have up here, 27,183, yeah, that would put you at the 50x pool up here at 27,185. That does show a nice juicy pool of $161 million and 50x shorts. I would be surprised if they let those guys survive. Not financial advice, just telling you they might come for those shorts up there at the bare minimum. Do they go higher and take out the guys at this BPR fair value gap or not is up to the future to decide. Well, this is what I'm seeing for the play right now on the 4-hour time frame, despite the cross down and the 6-hour cross down against this idea. Hourly is also overbought here, so we could see a little bit of a squeeze here to the shorts at the bare minimum, and what happens after that point is anyone's guess. So that is my story, and I'm sticking to it. I wanted to show you a little bit of what's going on in the NASDAQ before I head out for the day and go into the futures market. Yesterday was a very intense, crazy day in NASDAQ. As you see, we are going crazily to the upside here, and if anyone was questioning the stocks being slow, they just don't understand. The stocks are extremely volatile, if not more than Bitcoin at the moment, and exciting to see this stuff, because just even yesterday we were trending like a madman to the upside here, and we still continued almost to $14,000 for the NASDAQ. So is this going to continue higher to 14K, or are we going to head back down into these clouds and the 618 bounce below? Looks like a lot of earnings reports for companies are coming out suggesting more upside perhaps. We will see. So, and if you are considering wondering how to get funded and do this futures trading thing, you can check out the links in the description for some coupon codes that will save you significant amounts of money on taking evaluations. And if you have the Momentum Master Suite, we have a lot of already funded people there to assist you, including myself, which we'll be doing just after the stream finishes. So I thank you for your time, and yeah, that will leave you at that. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, and we'll keep you